Guys, give me like 2 minutes. Mic test. Mic test. Can you guys hear me? Type yes in the chat if you could hear me. Howdy, yo. What's going on, ladies and gentlemen? It's a Friday evening here. Saturday, going into Saturday. So, what we got here, ladies and gentlemen, is a possible completion of a move to the downside. We've been calling this move for quite some time, right? We were expecting this to be resolved as some kind of W, X, and Y, but this was very sharp. So to fit that into perspective, it's best to be calculated as some kind of ABC. Just when you're zoomed out like this, the micro time frames becomes less relevant in terms of the actual counting. But when you're zoomed out, one second. But yeah, when you're zoomed out, it just looks like a three wave, right? I mean, it's kind of difficult to count an impulse. It'd be weird to say that this is 1, 2, 3, 4, 5. But again, we don't know. for now, I'd say that this is some kind of at least beginning structure of an ABC. Now, this could develop into something else, of course, and we'll go over that count in just a second. But for now, what I like to believe is that, with some kind of expected margin of error, like we have discussed in our social media, is that the CME gap is pretty much the last resort of some kind of wave 4 correction, in my opinion. Now, when you're taking it, I mean, it really doesn't matter at this point. It's just peanuts. If you're, using the fib extension, we've hit the 100% pretty much on the dot. Expected we went into some kind of liquidity of the CME gap. And I wouldn't even say that this 161.8% is going to be even a wave 4 at that point. So we can remove that. So we're now, technically in that zone that we are looking for liquidity, or at least some kind of area of interest, right? And then that would be our wave 4 termination point. Now this wave A is developed as a 3-3-3-3, or whatever you want to see, a 5-3-5-3-5. But the best way I can count this is possibly some kind of leading expanding diagonal going to wave A, just to kind of compensate this range, right? And say that we want to say that this is some kind of major termination point. Now, we can say this is an ABC going into a W and then X and then Y, but it removes a lot of the forward kind of possible thinking that this can also turn into another ABC corrective move, which could be a double zigzag, right? So, there's a lot of ways to interpret this. I think some people on my social media were saying, or like kind of giving the portrayal idea that this may be some kind of ABC. That would be that 1, 2, 3, 4, 5 idea that would go into that C wave, but I don't like that idea. Just because this idea helps us expand on future possibilities of extending this correction, right? Because when you're working with a wave 3 that terminates here, your only possible last resort is this expanded flat. So number one, having your wave 3 over here is, longer in time against this wave 1, 2, and it's also not favorable just due to the fact that this was sideways 1, 2. But it's a simple fix, right? I think a lot of people are just over exaggerating the validity of what structure. I mean, no structure is invalid. I think a lot of you are overthinking how this could be fitted into a larger structure, right? But for me, what I like to have here is a sideways 1, 2 and a possible sharp 1, 3, 4 here. And going forward, the reason why I like to have this wave 3 placed here is because there's a possibility that we could be extending this correction, and we're utilizing this ABC into a possible ABC to the upside if this turns corrective. So to simplify this, it's very simple, ladies and gentlemen. First of all, for those that are just joining, thank you very much. If you are just joining, please make sure to hit that like button, subscribe to the channel if you haven't already. Your support means everything to me. Thank you so much. We're almost at 12,000 subscribers. It's kind of crazy. But thank you so much for joining. But what is very important here is that, like I said, we can expand upon, if this is an ABC, this is one major leg. So that gives us two options. We can say that this is a wave 4 that completed as an ABC. And then not only that, we're also removing the WXY idea, because that means you're only resorted to the WXY idea now. So if you have an alternative count that can, alternatively terminate the same, structure, the use of an ABC gives you that hierarchy of degree possibility of opening up what could be a double correction. So with that being said, if that is an ABC going into a W, all we're doing next is going to be determining whether this is going to be a 3-wave move. And this is where a lot of people fall short using the Elliott wave theory, or get a lot of confusion. They build up the wrong bias. It's just really, the talent lies in making sure you're well organized. I think the organization tactics when it comes to the Elliott wave theory is the most important thing. And then, on top of that, there's symmetry, geometry, and so forth. So with that being said, if this is a 1 or a 3, we know for sure that we've utilized this top being some kind of major termination point, right? It's the highest point within the overall range that we had here. So if this turns into an ABC, we're still utilizing, like I said, that same idea of that first idea of an ABC that can terminate here. And now you have the option of, like I said, if we're working in a three-way move, then we know for a fact that now we have resistance, support turned resistance, where this whole range was, acting as support, but we, went down like crazy in the past few weeks, right? And then if we come back up, retest this level, the 61.8% is, it's a level of confluence anyways, right? But that lies straight within that level of confluence, 38.2% arguably as well, all the way up to the 61.8%. So if that is the case, we're looking for a possible X wave rejection here as a ABC if we do get a 3-wave here. Now, the thing is, this is where Elliottians, even including me, is we just simply do not know at this current stage if this is going to be a 3-wave or a 5-wave. We can find clues along the way, and that would be, that could be telling of whether this is corrective or not. But even with these hybrid waves, with an overlapping hybrid structure of a wave A or a wave 1, and then you're still going to be looking for an AB correction, right? Or in wave 1, 2 is similar. So the move when we get a bounce off of here, these Fibonacci levels are going to be the most telling, in my opinion. And if we, break above it and we get some kind of pullback and we still stay above it, then there's going to be more conviction leaning towards a possible forward continuation to the upside as a 5-wave move. Now, what I really do admire the good news is that, actually let's start with the bad news. Now, the bad news is that, a lot of people got liquidated here. I think I was one of the first to swap bias immediately before even the actual breakdown happened. I think a lot of people, Elliottians got into the actual bias after the invalidation, but we it was a hard call, to be honest, but we made sure that I also identified that this was a range in itself, right, as a possible X wave. And then from there, you tinker and you clean up the mess. Now you can have this as a possible AB wave, which, utilizes the same triangle for that structure. So, that being said, this did look impulsive. So, right now, the only real, first step that we have to be getting is, are we going to be creating a 5-wave move out of here into a possible wave 1 or a wave A? That's about it. You got to take it step by step, day by day. There's really no other way, ladies and gentlemen. We can sit here and just say that, there's going to be some kind of, crystal ball that someone may have. I'm telling you, no one knows, really. And the only way is to approach this analytically, day by day, and then making sure that you learn to swap bias along the way, and you alternate between what two scenarios are the highest of probabilities. Now, of course, probabilities are subjective in nature, but I wouldn't focus so much on the actual validity of the structure. Of course, the validity is important. What I'm talking about is the minor time frames. The overall structure of an ABC or a WXY is just telling that this is really, really close. You can really have your wave B here as well. But I like I said, someone actually posted that on my feed. Can't you just have this as a wave B over here, possibly go into a wave 1, 2, and 3, 4, 5 of some sort? At this point, it really doesn't matter. I just think this has a better fitting structure. This was distribution, right? It was the longest distribution against any of the other distribution ranges, right? This is a resolvement of that distribution phase. So in order to resolve that, in my opinion, this just seems like some kind of ending expanding diagonal. Now, expanding diagonals, they're rare in nature, but it doesn't really matter, because even if you have a B wave here and you're seeing this as a 5-wave move to the downside, you're still going to have a way to complete this correction. So just think, focus on how this could be overall, in general, be completed, in the sense that, is this a valid possible 3-4, and we should be focusing on the forward steps now, because number one, what I like to utilize here is the Fibonacci extension that from this termination point, and we did hit that 100% zone, and then we hit that CME gap. That's such an easy way to approach the technical analysis, right, ladies and gentlemen? Just what is the general market psychology, or crowd psychology, looking at, and can you apply that to the wave theory from an observational perspective? And you can, and that's why we have this as the possible ABC completion. Whether you want to place your WB waves, your WXY waves, whatever you want. For me, this is just one way to validate the possible structure that this is a completed move. Now, can we go down further? I don't know. But for now, I would say that there is a good, clear possibility that this has completed entirely. We've been calling for the move down from here around $98,000 before it broke down, but now I am calling for a possibility that there's a possible bottom here. Anything further down is going to be possibly part of a different bearish structure. It's just the way it is. Like, we have to stick to a non-biased approach. This is just really the only way we can be doing it. So what does that mean? Well, first let's talk about the micro time frames and see how this actually completed. As you can see here in the sub-minute degree in the green, we have, again, what I like to see as a possible leading expanding diagonal going to wave A, and then 1, 2, 3, 4, 5 going, or 1, 2, 3 as an ABC going into wave A, leading diagonal A, B, C, and then we have another WXY structure going into C, and then an ABC going into wave D, and then an ABC going into E. That is our B wave. And then if we zoom in, excuse me, we can have this as a possible 1, 2, 3, 4, ABC going into 1, ABC going 2, ABC going 3, ABC going into 4, ABC going into 5. Yeah, that's how I see it. Now, this is not the best looking structure. It's just not how it is, but it has a termination. This is just corrective overlaps. That's why we have that pattern to lean on in terms of what is a corrective overlap pattern. And this is really the only mode of correction or pattern or mode of wave that you can actually see this. So to me, this is more of an ending structure to me than anything else. And if you look at the actual divergence, there is some momentum divergences going on, right? If we take it from this point to here, there's a divergence here. There is a technical divergence from this point to this point, and even to this point by just a hair. So there is argument for that. I think there's a divergence on the 4-hour time frame as well. We have is this a triple divergence? I don't know. Yeah, it's a triple divergence as well. We got a clear divergence of the second point as well. So even as an impulse, it just still fits into that idea that this is, between waves 3 and 5, usually you'll find some kind of divergence being built, either in the diagonal or in an impulse of a C wave, right? So this does, give vibes that this could be, at least at the very minimum, some kind of relief rally on the table here. So yeah, keep that in mind. And then if not, if those divergences are just not, applicable to whatever we were saying, this is your possible next bet for another move to the downside, which is an ABC. Utilize that, and then, we're looking for 5-wave structure into an A, and then, assuming that these are the pinpoints for another corrective parallel channel, and you extend it, the median line here, as you can see, we got a median line here that got some kind of reaction. This level here is now going to be acting as resistance, eventually broken, and then the upper boundary should be retested. And that leads us to what I'm saying, the ultimate final boss level around the 38.2, in between the 61.8% for that wave X. Anything higher is gonna be deemed as a 5-wave structure assumption for the beginning structure of a larger move to the upside. So that's what we're talking about here. We're talking about whether this is in a WXY or this ABC to the downside. That is the ultimate way of seeing this. So next one is an absolute danger scenario, which is, are we going into a major bear market? Now, again, this ABC or WXY to the upside is going to be alternatively going into wave 2. So how do we get into a wave 1 in the first place? Well, we have a wave 1, 2, 3, and then a 4 for a triangle, and this is the 5th wave. That is how we count our 5-wave move to the downside. Now, is it the best looking impulsive structure? No, but it does fit into the original narrative of a 28% move to the downside. And if we take the fractal nature of previous bear markets, or at least some kind of major downturn, if you take it from the major highs, you also have a 27% down, and you also have a 38% down over here. That led us eventually to the bear market. And if we go back to the 2018, the first move to the downside was around 45%. So we're in that kind of below median level of meeting the expectation that this could be the first actionary wave going into a wave 1 of some sort, or a wave A of some sort. But to me, in my opinion, I think wave A is more, or wave 1 is more applicable if we're going to be going into some kind of bear market, right? These are all going to be different, it's differently structured. So if that's the case, how do we put this into a bear market perspective, and we may be working finally into a larger bear market? It's very simple. 1, 2, 3, 4, 5 goes into the first wave A. And then you have the bear market rally, which should be a significant B wave correction wave. And then you'll have another follow-up, and that should be your bear market completion. Now, this can turn into any kind of corrective structure. We'll have to see. But if we're following the overall, perspective of what we have seen in the past, history doesn't have to, play out exactly the same, but they can definitely rhyme, meaning that if that's the, we're just looking for, at the very minimum, a simple idealized ABC zigzag. Now, this can be turning into anything. The previous bear market, we saw a triple correction, which is a WXYXZ, if you saw this as the actual correction. Now, I personally don't like to see this as an expanded flat. I like to see this as a WXYXZ. So it can also turn into, possible double correction of some sort. It could turn into some kind of WXYXZ. This was the first of its kind in that 2021 run. But that is how I would see it. So if that is the case, that would be the ultimate bear market, in my opinion. We definitely don't want to be seeing that. So what's next? Again, if we look at the lower time frames, I think, in my opinion, we do have a pretty good contender for a possible bottom. I don't know if anything further. I don't think anyone knows, especially with this type of corrective overlap. Is this part of some kind of one? If you're seeing these types of 1, 2, 1, 2s, you ideally want these 1, 2, 1, 2 structure overlaps over here. And even at that stage, you're going to be skeptical of, okay, we have too many 1, 2, 1, 2s, right? Is this all part of 3, 4, 3, 4s? No, because we had a pretty straight initial move, and then we got the corrective overlaps. So in my opinion, that is most likely part of some kind of, and if we're trying to at least identify some kind of corrective overlap pattern, this would be the main case. And look at that, we got a rejection on that right there. So, there's that way too. And I think there's some people who are also talking about extending this possible move, right, as the ending diagonal, where you can have it like this, but you want to see your wave 5 longest, right? So you'd probably have it at this level over here, which is around 74. But at that point, like, do you really think that's the end of a correction of a wave 4? I don't know. It's kind of sketchy, right? I think, over the past few days, or at least the past week, this is the level of interest that we were looking for in our social media. We were looking for these levels over here. So, yeah, we'll see. But even then, I mean, even if we're working for such a fifth wave to the upside, 130, 140 targets, to me, this move here was telling enough that people are not prepared for their portfolios in terms of exiting strategies. Like the people who are, a lot of leveraged players are liquidated at this point, right? A lot of leveraged players. I think the final fifth wave to the upside, even if we do reach $130,000, $140,000 for a possible fifth wave target, I mean, this can extend as much as it wants. However, the same lesson is going to be applicable at that stage. I don't think the people who, saying, oh man, I'm still holding on to my positions, I know that there's going to be another move to the upside and I'm going to definitely take profits. Trust me, I really don't think the same. You got to be humbled, ladies and gentlemen. The thing is right now, like when you get up to these levels, at that stage, you're probably not going to sell because you're in profits, right? Number one rule is to take profits, right, ladies and gentlemen? If you see a clear five-wave structure, and this is not even clear, to be honest. I'm still I'll be totally honest. I really want to lean bearish at this point because this, to me, doesn't meet my criteria in terms of having a good look, right? It's not invalid, but I mean, if you really take this structure in mind, like that's not an ideal Elliott wave structure. The real Elliott wave structure, idealized structure, was around here when we were looking for a possible fifth wave, right? So if we connect those points, this is a far better looking structure, even though it doesn't have the best fifth wave look. I'd definitely take that. In terms of the proportion and the timing size, I would say that this wave was complete. So what does that lead me to? Are we going to take market inefficiencies into consideration here in terms of whether this is a completed wave 4, or are we going to take the market consideration that we're going to be a little bit more cautious now, take into consideration that this was a better looking structure as a 5-wave move, and now this is part of a larger corrective move that we're looking for. This is a WXY. So maybe that's a little bit more convincing. To me, I'm probably talking myself into that. I think that we may not be working for a fifth wave to the upside anymore. We may be working for a corrective structure. And it all makes sense because, we've been distributing in these ranges since November of last year. That's a 5-month gap basically. And then we straight broke through these levels. So if that's the case, the markets may be ready to sell off, right? And if that's the case, what happens next? Well, since we're keeping the same integrity of this ABC, this may be just a corrective rally, right? Opportunities, with every actionary or whatever, with every reactionary, there's also an actionary. And with actionary, there's always going to be a reactionary. And this is what we're looking for. So the next ideal move here is whether this is a 5-wave or a 3-wave, right? And excuse me, this level here does lie quite nicely for this being, support turned resistance area. So that's the way we should be looking at Bitcoin, ladies and gentlemen. It's the best way I can organize this overall situation. I think it's really boiled down to not even personal preference. I think it's just more of observing the next possible 3-wave or 5-wave move. Stop focusing on what this structure could be, turning into. This, to be honest, it's not the best looking structure, like I said. But it is what it is. Right now, we did fill that CME gap. It's the balance of probabilities here. You got to lay out the foundation, write a checklist. I always have a pros and cons list. Like what is, from a neutral perspective, what has the highest evidence? What has the, more bullish convincing arguments? Never put your personal bias into it. Just trade the charts, right? What is the chart telling? the invalidation points are clear within the Elliott wave structure, right? So that's the way we should be approaching how these corrective structures are playing out. So hopefully that was helpful, ladies and gentlemen. There's really no other way to look at it. And I think for now, this one more possible move to the upside is on the table. However, with the idea that this move here looks better as a completed fifth wave, it just, from a timing perspective, we got a 30% move to the downside, basically, right? 28%. I also told you previous bear market territory, or at least some kind of larger sizable correction, leads us into that first wave. Has a 27%, has a possible 40%, 38%. We're in that lower spectrum of the median that we've achieved a significant first leg of some sort, whether it's an ABC, whether it is part of a 1, 2, 3, 4, 5 to the downside. Because on the macro, when it starts to actually play out for the macro bearish structure, none of this really, we're not going to go back and say, oh, this was a wave 1, 2, or 3, or 1, 2, that's invalid or that's valid. When you're looking at these structures, like, no one's looking back at how the internal structures are actually counted, right? As long as the overall grand scheme of things is playing out, that's the most, important way to approach the market. So, yeah, if I had to choose, I would probably, if you had a gun pointed to my head, most likely I would say, just due to the fact that, with all of the evidence racked up, and this looks like a better 5-wave structure, I would say this is going into an ABC, and whatever rally that we have, monitor it. That's the second step, of course. But if I had to, warp into the future and kind of predict what it might play out, this might be turning into an ABC, and we might get a solid rejection here, just due to the fact that we have distributed for several months and breaking down with quite clear conviction that any corrective rally into going into the next month or so, this X wave is highly lingering in the shadows, that anywhere between the 38.2% or the 61.8%, that golden Fibonacci level is going to be very important for bulls to secure to continue the rally to the upside. Now, that doesn't go to say it's not impossible. It's just a little bit unlikely right now with how far we have gone down. So expect a rally for both scenarios to organize it. If it's clear impulse off of the lows and we break above the 61.8%, you know for a fact that you're working for a fifth wave. If not, and we get rejected or we find some kind of stalling happening within the major Fibonacci levels, then you know for sure that you might be in a wave X. And that could be a good connector wave for the top range on how this could be created as a possible parallel corrective channel, which is an Elliott wave channeling technique for how these corrective channels play out. And then usually you'll see another ABC follow suit, and then that could be around $65, $50, even $50,000, up into these regions over here around $80,000 again, $70,000 could be a good zone. So let's get some questions in. So what's my plan for XRP if BTC goes into a bear market? It's quite simple. I've been well prepared for it anyways. Many of you know my overall grand scheme of planning for how XRP plays out. But if I had to give a short story on it again, you guys know very well my positionings. I've already sold 50% to all the haters. Why this is another wake up call for you on why I took put profits here, no matter how bullish I am. I've been accumulating XRP for over 2,000 something days, I think. And then we broke above these levels over here, and that's where I took profits, about 50%. And then we're just monitoring how this next move plays out. So it's really all entirely dependent on where you're positioned in the markets right now. So that's the first thing. And number one is making sure where you are positioned, because there are, majority of the people might be positioned around these levels here, maybe around these levels here before the actual breakout happened. Raise your hand if you are positioned within these regions over here. Type yes in the chat, because I know for a fact that many of you are positioned over here, Then there's a select few who are positioned within these levels over here. So, you may be in that same grand scheme of things in terms of the positioning with me, but there are people who are positioned here. So the strategy does change in that perspective, right? But when it comes to my personal strategy, yeah, type yes in the chat. Is anyone positioned in these levels over here or over here? Just, I'm curious if you're where you guys are positioned. Over here, high, middle, or low. Type that in the chat. I mean, I'm really curious on where everyone's positioned, because the strategy does change, and I can kind of lay down where the strategy is. So type low, middle, or high if in the chat, wherever you're positioned. I'm really curious on where you guys are positioned. And if you had to, if you're not, then ideal, like low, mid, or high. Or you can just say you're liquidated, but that's fine too. But yeah, so for me, I'm positioned low. Some of you are positioned mid, some are positioned mid high, right? So if you're positioned high, you're nervous, right? Of course you're nervous. You're gonna want a specific scenario that's gonna be playing for higher levels immediately. If you're positioned in the mid levels, you're nervous as well. You're not, in negative profits yet, but you are scared. That's the thing. That's where a lot of people are gonna excuse me. You still want, higher levels, right? But if you're positioned low, this scenario doesn't matter. It can still go low and you'd be still well positioned. In fact, you'd be arguing for this possible scenario here. So what if it turns into a different scenario where this one might happen? This fulfills not only the people for these people over here, it fulfills the mid and the high level position players, right? If this does turn into a 1-2, this 1-2, 3, 4, 5 is what you're going to want. That's about it. That's the only way in terms of position. You're at the highest risk, and you're now narrowed down to, or you're laser focused into one specific scenario, which is this. You want this to be a fifth wave, to be at least extended somewhat. So if that's the case, then this is the last resort scenario where we're gonna be going down for another ABC to the downside for this wave 2. So as you can see, congratulations to all the low players, including me. All three scenarios are fine. You're sitting at a pretty nice level. Now, for me personally, this level over here around the 94 cent is my last resort level of, we want a GTFO at that point, right? It won't be a major loss. It'll be, pretty much, a little bit above profits, right? Above around the 93 cent region. So if that level breaks, bada bing, bada boom, if I sold here 50% and I already sold 50% here, my average sell-off position would be around here, and at least we'll know we're going into a bear market. So, that's still a hefty profitable position. But that's the strategy, ladies and gentlemen. You have to find accumulative patterns and take the most risk of building your positions within these regions here, you know, building your seed capital at these levels over here, because even on a minuscule breakout, you'll know for a fact that, you know, this is going to be a very profitable position, you know, even on a 50, 100% move. So many people are looking for 1,000, 15,000% moves just to get into, you know, a healthy position of where you want to be, right? You know, we all idealize our own portfolios. I know what you guys do, man. I know you guys do. You always go into Binance every day. You check, you know, you type in the amount of XRP you have in the limit order box, and then you type in a possible, you know, your idealized pipe dream scenario of, you know, if I hits $20, I'm going to make this much money, you know? I know you guys do that. I know all of you do that. But, you know, pipe dreams is a pipe dream. You want to be building your positions here where you are making good, significant cash on just even a small breakout. That's the strategy that you have to be taking. So that's that. I mean, that's really the only three scenarios that I'm seeing. There's no other way. It's just, as you can see, it's high level here or here. That's it. Distribute first or not distribute. That's about it. Are we moving quickly, or are we going to move, you know, relatively sideways for the next eternity of, you know, our lives for the next few months? This would be the ultimate bullish scenario, though. Ultimate bullish scenario. This would lead us into, you know, $20 to $40, $50 regions. That's why I'm sitting here just spot and chilling, you know, just chillaxing, you know, that little dog with the one hand in the pocket. That's who you want to be in this market. But yeah, I've already graduated from the markets anyways, so it doesn't really matter. That one dog that has his one hand in his pocket, and then you have that little piano riff going in the background. That's who you want to be in this market. Build your positions early. And that leads me into what could be another potential possibility. I mean, I've been accumulating this one for, you know, a very long time, you know, relatively. I'm a little late, but still, it's the same idea, you know? It's like you gotta assume. The only risk here is just assuming that a breakout's going to happen or not. At least you know where your invalidations are with the accumulation phase going on, right? So if that's the case, could this be an insane breakout? Maybe, maybe not. At least we know the invalidation points, but at least, you know, we're building the most risk in these regions over here where most of the days are just, you know, sideways accumulation here. And then the breakout happens, right? Even just on a, you know, a nonchalant small breakout to the upside, you know, 300 to 400% is going to be far more profitable if you've been accumulating here for the rest of your lives, instead of, you know, entering on a small position here or entering your positions at a later date when the actual breakout happens, right? Then you have to, you know, based on compounding, it gets far harder to, you know, compound your actual portfolio. You know, it's a lot more difficult to go from, you know, $100 to $500, but it's a lot easier to go to $500 or $1,000 because that's only 100% gain, right? So that's something that you have to keep in mind in terms of a mathematical perspective of your own positions, right? So yeah, that's just my personal strategy, ladies and gentlemen. I like to build up our positions here. My thought process for portfolio allocation it's mostly in my Discord. I give a pretty clear picture on where I actually accumulate, what I accumulate, and then yeah, if you want to know more in that sense or regard, the Discord membership's gonna be for you then. And then Patreon as well, Patreon membership. If you want to get a little bit taste of what I offer in terms of services, the Discord membership, or not Discord membership, well, Discord membership too as well, but also the Patreon membership where I update twice a week on Wednesdays and Fridays We've been getting some good feedback on that as well, because it's enough of, understanding of my train of thought on Bitcoin. So if you're interested in joining that, the link is in the description below. If you are interested in joining the Patreon membership as well, so I'll put that into the chat as well. And then do you think the ending expanding diagonal scenario for BTC could still be in play? Like the last move from 78K to 84K was the fourth wave. Let's see. No, I don't. I think at this point, it's just really a very simple approach. Is it from point A to point B? I mean, everything in between is just going to be too creative. I don't think that we'll find a real answer until we actually break the highs. But like I said, very simply put, ladies and gentlemen, to go back to my Bitcoin analysis, the simplest way I'm seeing this is, are we moving a 3-wave or a 5-wave to the upside? That's about it. It's really the only way. Are we part of, a 5th wave to the upside where we're working for an impulse? Or are we just working for, now that's a completed move as a 1, 2, 3, 4, 5 that terminated here, and this ABC is now going into wave W, and this is X and Y, and then we move down further. At that point, we won't. This could be alternatively overlapping with another structure of a 1, 2, 3, 4, 5. So the really best way to draw this out from a Venn diagram or some kind of picture is if in that scenario, ladies and gentlemen. Okay, so if we have a timeline like this. And the first idea that we're looking at right now is a completed ABC. We're working for the 5th wave to the upside, right? The 5th wave scenario. Okay? This is the first scenario. If that plays out, if we get a bounce, this can overlap with the idea with a WXY scenario. Okay, this means lower levels. So higher levels, lower levels. Okay, what does the WXY scenario overlap with now? The bearish scenario, which is a very strong impulse to the downside. So it's if and that, basically, right? So if we draw this out, you're just overlapping each other. So what does that mean? If we have the possibility of this scenario and we have the possibility of this scenario, it's most likely, from a probability perspective, that this has the highest probability. It overlaps with the possibility of a 5th wave scenario to the upside. That's a little bit more radical and a little bit hard to validate at this stage. And then you have the radical idea that another major move to the downside could also be playing. What is this? What the heck is going on here? Dang, man, what's up with those? Holy crap. Hold on. What the? Hold on. Okay, there we go. Yeah, so this is what I'm talking about. This scenario is most likely if it overlaps with each other. So you have 3 scenarios laid out now, right? The Venn diagram, basically, right? If the WXY scenario overlaps with this scenario and the WXY scenario overlaps with this scenario, this is what I like to choose. It's what I like to choose. I really want this to play out from a bullish perspective. And then if you're a bear, you really want this scenario to be playing out, right? At least this shows a balance of both scenarios, right? In a sense that it's the most approachable. So if we have the deeper wave 4 idea, and then we're working for a fifth wave to the upside, this one here, then we can easily swap bias into this scenario because we have this here overlapping structure. This is where the overlapping happens. It's either a 5 wave or a 3 wave to the upside. If it breaks that Fibonacci level, that major Fibonacci level, then you know that this is going to be goodbye, and then we can just easily go into this level here of that 5th wave, right? Is this helpful, ladies and gentlemen? Does this even make sense? Like, does this make sense for everyone? Like what I'm trying to portray in terms of how to organize these scenarios, and then if the 5th wave we turn into somehow some major bearish structure happens, then that's the possibility, right? We can swap into this at least last minute of some sort. Oh my god, dude, this is, oh my god. I need to get a moderator for this channel, man. Does that make sense, though, ladies and gentlemen? Like, how I'm trying to organize this? Yeah, let's end this live stream soon. No, I'm hiding them. That's the thing. I'm hiding them. Keep it coming. I can do it forever, man. You bots, I can do this. Keep doing it. I don't mind. I can do this forever, bro. Ha ha ha, you can't stop me. Can't stop me, bro. So yeah. You trying to do it again? All right, let's do it. Let's do it, man. Keep it coming. Yeah, keep it coming. Yeah, so yeah, this is the best way. I mean, I should actually draw this out for everyone, like in a better way. I will make sure to do it. I'll make sure to show it. Anyways, ladies and gentlemen, I'm gonna get the getting a lot of. Yeah, I want to report them too. Why can't it be a WXO? I just told you. It's very simple. So the channeling perspective, it keeps a balanced perspective on how this can be working, because you have support turned resistance now. You have an X wave that's a possibility. It utilizes that same ABC pattern, and then we're gonna be rejected ideally at the 61.8%. And then the ABC should be following suit. And then we also have a very clear 5-wave structure to the upside. So, all right. Thank you, ladies and gentlemen. I'll see you guys in the next video. This is not stopping anytime soon. So I'll talk to you soon. All right. Bye-bye.